Good evening and welcome to the Business Day. I'm Andrea Chisholm. The Organization for Economic Cooperation and Development has warned that the global economy could grow at its slowest rate since 2009 due to the coronavirus outbreak. The influential think tank has forecast growth of just 2.4% in 2020, down from 2% in November. But it said a longer, more intensive outbreak could lead to 1.5% growth. It came after the Bank of England vowed to help stabilize markets, which suffered steep losses. Last week, major stock markets suffered their worst weekly performance since the 2008 financial crisis, with $1.5 trillion being wiped off the value of global shares. Coronavirus is already forcing businesses to suspend operations as officials try to contain its spread. Currency trading ended today with the US dollar selling for $136.59, the Canadian dollar $102.85, the pound sterling costs $172.88, while the euro sells for $151.18. JetCon published audited financials showing its profit dipped by a third last year. The car dealer reported $60 million in profits, down from the $92 million reported in the previous year. Car sales, however, amounted to just over $1 billion. Meanwhile, Kingston Wharves reported that its profit jumped by a third last year. The shipping terminal's profits reached over $2.6 billion in 2019. Investors continue to take profit on the JSE today, pushing the market down more than 3,700 points. It's down 4% since the start of the year. The junior market also fell by 7% and is now down 6% in 2020. Stocks posting gains include CAC 2000's 9.5% preference shares, medical disposables and supplies, stationery and office supplies, Stanley Motor, JMMB Group 7.5% shares, and Carib Cement. On the losing side, Phosrich, Portland JSX, Indus Pharma, Cygnus Credit US dollar shares, and First Rock Jamaican dollar shares. And that's the Business Day. I'm Andrea Chisholm. Good evening.